Welcome back to Business Poland. I'm Roman Młotkowski. Normally we meet somewhere downtown, I would say. This time, well, you can't see much behind me because we really don't know what 2009 is about to bring us. Of course, there are some analysts who have some insights or ideas, so we've met with some of them to find out what they think.
The first signs of a slowing economy are beginning to be seen in Poland, and forecasts for 2009 show it will bring lower economic growth, lower interest rates, and something people can be happy about: lower taxes. Starting in January, Poland's old three-tier tax scale vanishes to make way for the new two-tier system. The old rates were 19%, 30%, and 40% levels of taxation, while the new rates are 18% and 32%. For the new year, it means a potential savings for some taxpayers. Previously, the burden of proof was on the tax authority to demonstrate how much tax needed to be paid. Only then taxpayers were required to pay. Now it's something totally different. Something else getting a facelift is Poland's retirement system. And from the new year, over 700,000 Poles will no longer qualify for early retirement, as the retirement age gets pushed back 5 years to age 60 for women and 65 for men, which will be a huge savings for the government budget. Another important issue in Poland is entry into ERM2, the 2-year waiting period required before entering the Eurozone. According to the government plans, it will happen in the first half of 2009. And experts believe the government will meet all the requirements needed to satisfy the EU's criteria for Euro adoption, including a change to Poland's constitution to allow for the common European currency.
Possible entry to the ERM2 system, which will be important not only for perception of the Polish economy by global investors, but also it may have impact on the zloty exchange rate.
But there are 2 euros in 2012 for Poland. First is the currency, but the second is the Euro 2012 Soccer Championship Games, to be hosted across Poland. It's a race against time as the government rushes to complete projects to build stadiums and critical infrastructure, such as the over 90 kilometers of badly needed highways to be created before the games take place in 3 years. Unfortunately, the race against time isn't the only challenge that Poland is facing, especially as the global economic slowdown spreads, and many wonder if it will spread to Poland and how bad it may get. Approximately 35% of Poland's income is exported to other markets, so a slowdown in that area will likely mean a slowdown in Poland. While forecasts show a lower GDP growth for Poland at 3.8%, it doesn't look that bad when compared to GDP of other nations, like Germany at 0%, the UK at -1%, and the USA at -0.5%. But stock market analysts have a different take and say for them, 2009 is not likely to be a great year. We shouldn't count on a rebound for the Polish economy after the sharp decreases in 2008. I think the crisis on the markets may even last until 2010. But even if the times aren't the best, this new year is something to celebrate since it marks 20 years of a free market economy in Poland, which began in 1989.
So this was Polish analyst's take on 2009. Meanwhile, our market reporter Błażej Karwowski went to London and sat down together with some city-based analysts to find out what they think lies ahead of Poland.
Now, we are here to talk about your outlook for 2009, but I would also like to talk about 2008 and how it changed your view of the region. Roger, if I can start with you.
Yeah, we initially, early in the year, thought that 2008 would be a fairly prosperous year, underestimating, I think, the effect of the global credit crisis. And so as the year has progressed, our expectations have had to come down. One thing that we have noticed in terms of Poland, as well as parts of Central Europe, has been that they have been relatively resilient compared to the damage we've seen in Western Europe. And so what we've seen is a widening gap between valuations in the marketplace, the equity market, and the actual potential wealth creation and profit performance of the companies going forward. So there is some value there. The question is, how soon will investors become confident enough to come back into the marketplace?
And David, do you think that currencies will not depreciate as quickly as they did in October, November, for example, for the region?
Well, first of all, I would think that a large part of the risk has now been priced in. That explained the very large move that we have seen in the fall. I also think that, as you mentioned, that a large part of equity inflows over the last several years have actually already exited these countries again. And so I would think that whatever is gone cannot leave anymore, which means that a large part of the move for the currencies has already happened. At the same time, I would think that, as you said, clearly these central banks will continue to cut rates. And I think there's a very interesting situation here in Poland, because Poland is probably a bit different from the other countries. Poland is thinking about entering ERM2 in 2009, and it might actually mean that Polish rate cuts will have to be somewhat more limited than in the other countries, because Poland will need to be very careful to observe the inflation target that is implied by being in ERM2 and entering the Eurozone. And in an environment where the Eurozone itself might actually see a deflation in 2009, you would need to keep Polish inflation very low, which means relatively high rates.
Matt, what's your opinion?
I think on the monetary policy side, that's where we will see, central banks will cut rates. They have started already. And what we've noted over the last few weeks is that central banks have been able to cut rates without currencies suffering from that. And that was a surprise, I would say. We've seen in Turkey a surprise rate cut. We've seen in Hungary and in other countries. And the currencies have done well. So I think central banks will take that as a cue, and they'll continue to cut, and that will help the economies.
Yeah, there seems to be some feeling that rate cuts increase the chance that the economies can go through this with less damage to growth. And so that's one reason for the currency reaction, I think.
Larger potential for correction in equity and currency flows. What about the, so to speak, correction in the economy?
In relative terms, Poland will look still quite good compared to some of the other countries in its immediate vicinity, but also farther away in Eastern Europe.
Matt, what's your opinion?
Yeah, I think the most important point is to recognize that this is not a regional crisis. This is not even an emerging market crisis. It is a global crisis, and those countries we're talking about here are affected, some more or less. But particularly when we talk about currencies, I think the Polish zloty has still done better than the Australian dollar or to some extent a number of other currencies. So this is really a global phenomenon.
David, what's your GDP projection for Poland for 2009?
1%.
Roger?
We're looking at 2.1, but we have to admit there's some downside risk. 2.1, possibly less.
Zsolt?
We're still looking at 3.5% growth in 2009.
Okay, very optimistic. And Bat?
2.5.
2.5%. We have to wrap up. Thanks a lot for joining us.
Cautious optimism about Poland. That's how we can summarize what Błażej Karwowski heard from London-based analysts in the interview. Now let's just quit forecasting for 2009 and try to see how Warsaw Stock Exchange was trading in the last days of 2008.
In these last days of 2008, blue chips gained 2.4%, but the whole year was definitely a bearish one. Actually, the worst in the history of the exchange here in Warsaw. The blue chip Week 20 index lost 48%. The broad market index week is down by 51%. Small caps lost almost 57%, while mid caps are down by more than 62%. All those indices that I just mentioned posted their largest ever yearly declines. On the other hand, there were 94 IPOs here in the Warsaw Stock Exchange, which probably makes it #1 in terms of IPOs in the whole Europe. That's all from the Warsaw Stock Exchange. I'm Jan Niedziałek.
So that was the last week of trading in 2008. And you probably think, okay, so where is in this program place for traditional review of events that happened last year? Well, here it comes.
A year ago, this is how Poles were welcoming 2008 in the city center of Warsaw. And after a year full of news about crises around the world, Poland is saying farewell to 2008. Although for this country, in a macroeconomic sense, it wasn't that bad. At least not yet. It was a good year. It was the third consecutive year of growth at a rate of 5% or more. The Polish economy gained speed in 2008, and only lately has it slowed down. Poland remains at the top of the list when it comes to the fastest developing countries in the world. In 2008, it saw employment dip to 8.8% in October, which was much lower than in previous years.
On the positive side, after years of strong economic growth, we had a massive decline in unemployment in Poland. It was the first time when the Polish workers or the Polish society could actually feel the effects of economic convergence.
But according to one of Poland's wealthiest investors and a race car driver, Michał Sołowów, Poland made it through the sharp economic turns that came in November. Consumer demand in Poland dropped in November, but in Ukraine and Russia things got much worse. Unfortunately, things also worsened for Germany, a leading importer of Polish products. Another way the Polish economy was impacted was via the foreign exchange market. At first, the Polish currency zloty strengthened to record highs. Shortly after that, it fell. And in Poland, the Forex game became a real headache for many business owners who tried to hedge their bets and company money on a stronger zloty, only to end up on the losing side. And those currency headaches turned into something bad for consumers as well. Those with home loans in Swiss francs had headaches of their own, as they were faced with increases of their monthly payments by several hundred zloty per month. At the end of the year, banks stopped giving loans in Swiss francs. Also, loans in zloty were more expensive. That made it tough on those seeking new loans. In fact, the granting of loans in francs nearly vanished from the Polish market, but the focus changed as the government looked to euro adoption. 2011 should be the year that Poland meets the EU Commission's criteria and gets approval to enter the ERM2. But for now, it's only a plan, which was adopted in the last days of October. The plan outlines 2012 as the year for entry into the Eurozone, but the challenges Poland faces are decidedly more political than economic. Shortly after declaring its intentions, the government found out it would take longer than it originally planned. And then there's the Warsaw Stock Exchange. In October, like many markets, it saw a decline, and for the first time in several years, it fell below 2,000 points. Later in the year, it got worse, losing about half of its value by year end. The Polish exchange didn't deserve to get beat up that bad, because the economy in reality is in much better shape than as seen by the WIG index on the exchange. And that served like a reminder to investors that playing the stock market in Warsaw, like anywhere else, is an elevator that not only goes up, but also goes down.
The global crisis that started in the United States is spread all around the world, also reaching Europe and Poland among them. Unfortunately, we are hit by this crisis, and in 2009 it will be much deeper.
And as the year has come to a close, many in Poland have the crisis on their minds. There's no doubt that 2008 will go down in history as an emotional one. Now we can only hope that the lessons learned and the examples given will be used to avoid the same mistakes in the coming years.
Review of year 2008 events was the last point in our program, first program of 2009. Whatever's down that or whichever road Polish economy takes, we'll keep you informed. Meanwhile, Happy New Year and stay tuned to CNBC.